Welcome to the DeFi legal panel. My name is Alex Lindgren. I'm a partner with Loy Law and a member of the executive committee and working group with the Multi-Chain Asset Managers Association. And I'm joined here today by some excellent attorneys, starting with, on my screen, my right, Sarah Brennan. You want to introduce yourself?
Sure. Hi, my name is Sarah Brennan. I'm general counsel at Delphi Ventures, and I'm a contributor at LexPunk.
On my screen, I'm right below Sarah, so if we're doing it in a Brady Bunch way, I would go next. So my name is Rebecca Rettig. I'm the general counsel at the Aave companies.
And since I'm last, I'm sure it's my turn. I'm Mark Boron, and I'm the chief legal officer at dydx Trading. And before that, I was in private practice, helping out a lot of DeFi companies with Rebecca as a partner.
All right. Thank you, everyone, for joining, and a really excellent set of attorneys here. So I think to start us off, why don't we give the audience a little bit of some insight into trends in the marketplace. There's been a turn in the market, which has been sort of all over the news. And I think there's been a lot of evolution, both because of that and for other reasons, on everything from token distribution sort of approaches and the risks and rewards around the different approaches there, to a lot of evolving DAO activity. So why don't we start with token distributions and what we're seeing in the market? Mark, do you want to start? Maybe tell us what you're seeing from your perspective.
Sure. I think from my perspective, I think the interesting things regarding token distributions, I think like if you go back to when like Compound kind of evolved, how essentially you distribute tokens to a public through liquidity mining. I think you've seen like evolutions from there, but in my opinion, you had that, and then you had essentially Uniswap dropping, a large percentage of the total supply to pass users. And frankly, I think since then, everything has been like small iterations on that. I think like the interesting developments, it's just kind of funny because it's almost like going back to 2017, 2018 eventually, which is like in 2017, 2018, you had these like, broad token sales, and effectively what you had was like people who, ignored kind of jurisdictions and things like that. And eventually what you saw was people kind of starting to focus on, non-US type distributions, but not really taking it very seriously. And I think the interesting thing that we're seeing now is kind of that swing back in that direction, like more and more. And it's not just token distributions, right? It's just how, I think front ends are handling effectively like where people are located. But I think it's interesting to see this swing back to, do we stay out of certain jurisdictions, and how do we go about doing that? And I think there's, some models for doing it, better than others, right? Like I think there's some that are still doing what you saw in 2017, 2018, which is, let's just say, you can't participate because you're in a certain jurisdiction. And then I think there's some that actually take it a lot more seriously and try to actually put measures in place to prevent that from happening. But, I think this is interesting, frankly, because there's like a huge misunderstanding in the market around like how this works and why it's done. People are always commenting about thinking that like somebody has a subpoena because they take a certain action, or they think that like some SEC action is relevant for why somebody does things for like CFTC purposes or for, money transmitter purposes. So I think overall, I think the interesting part of that is just that there's like very, I think, specific like best practices and certain situations in which it makes sense to do that. And I think there's others where excluding the US still probably doesn't make sense.
Yeah, I'll say another interesting trend. I think the jurisdictional point is a good one and really important. I think the other interesting trend is that people are, rightly so, waiting to engage in token distributions to figure out the functionality of the platform and what the real use of a token would be, which I think is a great development, and differentiates from 2017 when there was just a lot of, creation of potentially useless tokens. Then I think that goes to what else we're seeing, where people are revisiting tokenomics of existing tokens and how and why they'll work. And so I think that's an important thing for projects to think about moving forward, which is like, do you really need a token? And if so, how is it going to work? And then goes back to all the questions that Mark started posing, which is, where will you distribute it? how, and what makes sense from just a general regulatory perspective.
Yeah, I'd say just to layer on that, we've seen like a perpetuation of longer lockups for teams looking for incentive alignment on lockups, keeping skin in the game for longer periods of time there, which I think is a great development. And I'll make my market joke that lately we've seen a lot of postponements of token launches given the market. As people reevaluate things, but that would be one strong trend that's going on right now.
Yeah, I think that's something we've seen as well, and as I think I agree with you both. It's probably not a bad thing that people are taking a little more time to contemplate what the token's going to be for and how it's going to work within these systems. That kind of leads into kind of the often tied to the token distribution, the evolution of DAOs, right? So DAOs we've seen increasingly used, variety of contexts, right? We've seen the Constitution DAO, we've seen people setting them up for everything from what looks like sort of investment activity to just community organization and everything in between. And I think we've also seen an increase in the sophistication of activities that those DAOs are undertaking in terms of what you might think of as like corporate governance or transactional complexity. So what are you guys seeing? I know we see variations on this, but I'd love to hear your guys' perspective and what you've seen on the DAO evolution front.
So I'd say that the increased complexity is definitely a trend. There's more tooling out there. There's more sort of DAOs building on other DAOs. And again, the M&A trend. I think that, we've just seen like a first iteration of a lot of these, like Constitution DAO, the Rari Fey merger, and it is an avenue, right, to see on how you can build. So like, in the merger context, making sure there is, the minority rights. I know in the end, I believe there was like a rage quit mechanism, and they had to like work through that. But just like keeping, what I see the spirit of DAOs are, like user owned, community based, flat, horizontal, structured, transparent. And like, as we build and make things more complex, I think that you need to be cognizant of, there was one talk that I listened to that I liked that said, like money Legos versus like Lego Jenga or money Lego Jenga. And you just have to be careful as like risks stack that we're all cognizant of, what those risks are.
I think the other thing I've seen, it builds on what Sarah said, but is these DAOs within DAOs. So whereas you'll have these larger, 100,000 wallet address kind of DAO, I think that these sub DAOs that we're seeing built up in Maker, they're being built up through the Aave DAO, they're in the Uniswap DAO in terms of grant DAOs and risk DAOs and dev DAOs and things like that, I think are very important because there is this quandary that we're all in where you definitely have stakeholders participating in governance in various ways, putting forward proposals, and being pretty active. But at the same time, there are just times where you can't get this mass participation. And so I think what everybody has started thinking about is whether there are ways to incentivize governance participation, whether through governance mining people have started talking about, or other ways to bring forward a broader base of people driving these larger DAOs forward.
Yeah, and I'd say like the one other piece to it has been, how to figure out like how a DAO can operate still as a DAO, but with the protections of like a more typical company, right? So it's something that I don't think anyone has really solved well, at least outside the US. I think like in the US, the concept of like an unincorporated nonprofit association, which doesn't require any type of like government filing to form, is something that can work like pretty well because it gives you the limited liability protection that you'd want. It allows you to sign documents and frankly just interact with the real world in general. And that therefore it allows you to be like tax compliant as well if you're going to like pay taxes and handle things like that. I think the issue with that is that DAOs are not always like US centric, right? And so, and frankly, I'd say most of the time, a significant portion of contributors and token holders are not US centric.
Oh,
so
and
like,
how do you even know where a DAO that's not wrapped in a legal entity is? But that's a whole other
and the
story.
that's right. And it's like, why even assume that it's US centric when
Agreed.
frankly, it probably actually isn't. And so, I think like the thing that we are going to see in the next few months is a more non-US centric focus on solving those three issues, contract signing, limited liability, and taxes. And I think like if you start from like the principle of a DAO, and I like the way kind of Sarah put it in terms of like the flat organization and collaborative and other things, like the one part I'd add to that is the not needing government authorization to do things, frankly. And I think the tax component is the hardest. And I think that's why focusing on like zero tax jurisdictions is probably like pretty important in how to approach it, because otherwise you're always going to be subject to whatever it is that like a certain government tells you can do. And frankly, that government might say, hey, your entity no longer exists because of XYZ, because administratively they can do that. And so I think that's like something that people are focused on and something that needs to be solved. And frankly, I think it will be solved, maybe not elegantly, because you're basically forcing a digital concept of a DAO into the real world. But I think it can be solved in a way that is at least compliant and allows the DAO to continue to operate as a DAO.
Yeah, I think that's a good point, and it points to both. It actually kind of leads into both a point I wanted to raise and a question from the audience, which I think is really good. And so Miko asks, what's the best way for a DAO to pay salaries for its contributors? And I think that ties back to this tax question that you're raising, right? Which is ultimately, how do you deal with withholding and the other sorts of tax requirements that apply when you've got people that are getting paid? I don't know that there's a great solution to that currently, but I'm curious if you guys have seen, sort of particular evolving best practices that you thought were worth iterating on with regards to employees, right? Do you just treat them all as K1 members of a general partnership and hope for the best?
Depends on like, what do you mean when you say DAO, right? Like depends on the model. I know a lot of the more decentralized sort of let's say non-legal wrappered DAOs. I mean, people are using like third-party tools like Opolis has gained a lot of traction as an endorsement, but like it provided a solution for people to form S corps, LLCs, taxed as S corps, and pay their own payroll through them and get access to healthcare. So we're seeing a lot of like businesses pop up, like having this service layer to solve these problems. Like they're all very new and startup, like high growth. So there's kinks to work out there, but we're kind of seeing some solutions, but it really depends on the model of the DAO, right? If it's an LLC wrapped DAO, like you're kind of traditional in what you're expected to do to pay taxes, I feel like. So it's not a one size fits all solution.
No, what I'd actually like, sorry, go ahead, Mark. Okay, what I'd actually like to see being built up are text NFTs that work somewhat like contracts. Enforceability is a whole other issue, and you might have to still go to court to deal with them. But I'd like to see these text NFTs come to the forefront and have people interact with DAOs in that way for their services. Will they be able to get, tax forms in a traditional sense from a DAO if it's not wrapped in like an LLC, like Sarah was saying? No, but I do think that there is something to be said there for how to build out ways in which you can work for a DAO. I don't think it's like, oh, just a free for all. I think there are new ways to build that out.
Yeah, I think the other thing that, I mean, not to get like too technical about it, but like you have to think like, are these really employees or are they, essentially contractors? Because if they're contractors, then frankly, this is a pretty easy issue, which is send them their funds and you're paying the contributors and you're fine. Now, that's not entirely true, right? Because if you are like deemed to be like a US DAO, whatever that might mean, right? In terms of like the reporting obligations that you might have to the IRS in terms of like filing a Form 1099, for example, like maybe your entire, like you're not entirely compliant. I mean, I'd also argue, not that I'm advocating for non-tax compliance, but like the penalties associated with not filing 1099s, if that's your only issue, are like not all that significant. So like maybe that's not the worst thing in the world. I think it's, and this is probably what Miko was getting at, right? I think it's when you have employees that it gets a whole lot trickier. And I think that's where you kind of have ultimately, I think, two choices, right? One is to essentially admit that you have a general partnership and have that general partnership act as a general partnership. And then it can hire employees if it wants to, or it can add general partners to act as partners. And however it wants to do it, like that's one way to do it. But you're not going to avoid needing to pay, withholding taxes, for example, in most jurisdictions, or pensions in many European jurisdictions, for example. I think that, once you kind of get to that point where you're looking at those issues, I think it starts becoming important for like the DAO to remain a DAO as it is, but for sub DAOs to be formed and for those to strongly consider like some type of actual entity that can do all of these things. And I think, in terms of how they get paid, whether you're looking at like things like Sablier, for example, for like streaming payments, and then although that makes like the tax compliance, in my opinion, a little bit harder in some ways. The point is, like, I think you start needing, once you actually have employees rather than consultants, you start needing a real structure somewhere for purposes of compliance in pretty much every single jurisdiction around the world. It's not even a US thing.
Yeah, but you're making decisions as you go, right? Like as you go towards that spectrum of having employees, it's not like anonymous contributors. It's not like a loose cooperative and you don't really know who you're interacting with. You're getting towards like you have to know who people are. You have to do like employment verification steps. So you are like trending down that path. So again, it's not one size fits all. Like you're making multiple decisions as you trend towards like an employment with a legal entity.
I mean, thankfully, I think truly the way, at least the way I picture like contributors to DAOs, I mean, this isn't exclusively, we know this definitely is not exclusively the case, but in many cases, like the way the contributions work are much more contractor-like than employment-like, right? Like, you have like a significant portion of contributors are contributing to many different DAOs at the same time. Sure, they might spend more time on one than others, but it really looks like a contractor relationship where I think, especially if you want to be more aggressive on this, which presumably most DAOs do to avoid the issues we're talking about, you would take a position that you have contractors, solely working for you, and you just would make sure you don't have like an employee who spends 60 hours a week just doing X DAO work and not working for Y, W, and U DAO.
Yeah, I agree. Just to go to the second part of Miko's question about like how will people working for a DAO get money in their bank account? I mean, I don't think DAOs are going to be paying fiat directly into bank accounts. But if you're talking about how do contractors, and I do envision most DAO contributors as contractors these days, just from what I've seen, but you're right, it's going to be an ongoing spectrum. And I don't think that we're seeing DAOs in their, end form today. I still think it's pretty nascent and developing. But as far as, I think that, through the governance proposal process, depending on what the DAO is, but if you're working for like a large scale DAO for a large scale project, I think the payment mechanism should just be programmed into your proposal as it is, so that you have an expectation of when you may be getting paid instead of just having to chase down whoever is in charge of the DAO treasury. So I think that you could automate it even.
I also don't think, frankly, it's important for them to get money in their bank account. Like what's important for them is to get money that they can put into their bank account eventually, right? And so whether that's like a native DAO token, Or frankly, if a DAO sets up a proper structure that we're talking about, especially if they can find a zero tax jurisdiction and they want to exchange a native token for USDC, for example, and then pay out USDC. I mean, in most places, or USDT, like you can pretty easily turn that USDC or USDT into dollars, right? So I think there's ways to get those funds in bank accounts that doesn't need to be, frankly, connected to the DAO getting those funds in the bank account.
Yeah, I think it does depend on your situation. I think people really liked Opolis because it was a huge impediment to getting a mortgage before they started like offering a payroll service where you could, offer like proof of continual payment to your self-employed type of thing. So there are these like layered solutions coming up to kind of wrap around, you have the ability to convert like a native token into cash. And then there's the service economy popping up to make life easier.
Yeah. So, I mean, here's a question for you. And I think we probably all agree that these things live on a spectrum from sort of the pure DAO concept of just a community doing things together to sort of more and more sort of formal organized structures. And maybe a two-part question here. One is a little bit definitional. Like at what point is it something a DAO versus not a DAO, right? So to give an example, when we were talking about before the session started, we work with companies that are setting up, compliant, private funds and exempt or registered investment structures that are on chain and use a lot of the sort of DAO tools, right, to manage themselves, but are basically compliant, either registered or exempt investment funds or companies. And somewhere in this interstitial areas, right, we talked earlier about sort of DAOs within DAOs and layering of authority and that sort of thing. To maybe ask a challenging question, at what point do you stop being a DAO, and do you have the sort of information asymmetries that really demand corporate governance structures, right, or something comparable to them? And I don't know what the answer to that is, so I'm curious what your perspective.
I think so. I was about to, till you said that last part about information asymmetry, say that like I don't know that I love engaging in DAO purity tests, but I do think that DAOs, at least for me, legal wrappers have trade-offs, right? There's no structure that works perfectly, but if you have an equity concept where there's an ownership construct within the entity that's separate from the tokens, it does produce potential information asymmetries and sort of a break in the alignment of incentives, because those are both potential value drivers, which is why, the LLC as a DAO is not my favorite construct. I do like the memberless foundation. Every model has trade-offs, but to me, having kind of that flat organization without sort of a equity-based kind of, like management corporate officer construct helps sort of preserve what would be more DAO-like to me. No entity is gonna like be perfect, but I think it is just still experimenting. I don't know that there's an entity structure or any entity-less structure that's working perfectly right now. People are just making trade-offs.
Yeah, and Rebecca, you had mentioned that you're seeing, like on Aave, right? There's people doing these DAOs within DAOs, right? And I'm curious if you've seen good practices or sort of particular trends in how people are managing the the complexity of having DAOs within DAOs, right? As averse to just presumably they have to move beyond one giant Discord channel where they're all yelling at each other eventually.
I think that's right. So in positive news, I don't have a lot of insight into how all these mini DAOs are spun up because they are organically coming from a decentralized space. I mean, look, as far as best practices, just from watching things from the outside, not even about the Aave sub DAOs, but about a number of different DAOs that are going, for better or worse, you still need a few people driving the ship. Everybody plays a role in these sub DAOs, or even there's this general developer DAO that I've heard of being spun up that is meant to contribute to lots of different DAOs throughout the DeFi ecosystem. And you still have people who are organizing groups and putting them forward. So you're going to have those people, right? You can't just have 10 people who are all doing the same thing. So, distinguishing who does what in sub DAOs, I think, is an important practice. And having some form of, I think the other thing that I'd really like to see is more public information on how to engage. There's a lot of still, even if these sub DAOs like the Grants DAO for the Aave DAO or the Compound DAO or the Uniswap DAO, they have public pages. But what I think will be helpful going forward is not just how to apply to sub DAOs to grants, but I'd love to see more activity around how people can apply directly to DAOs for participation, to go to the payment part or working for a DAO or things like that. Because I think that once people see this as a way to make some form of a living, whether it's a complete living or not, it goes into this whole concept of the creator economy, which is pushing, I think, Web3 forward in general right now, and then gives people even more autonomy over their own financial/economic well-being.
Yeah, I think the point about the creator economy is particularly true, right? In the long run, this is how we're going to monetize that. Okay, so since we're cruising along on time, I think we want to move towards a last topic, which is where are we going, right? So there's been lots of actions and pronouncements from regulators in the space over the last year. We've had the FATF issued new guidance, the very voluminous new guidance and updated guidance. The CFTC recently weighed in with the poly market enforcement action, so there's been a lot of toing and froing, I suppose, from both U.S. and foreign regulators on the space in general, and particularly certain aspects of DeFi like front ends, governance, and that sort of a thing. So let's read some tea leaves. Where do you all think this is going? How do the regulators shape the space, if at all, from here?
So I think I'll get to your question, but first, going in another direction, which is, I think focusing on the regulators is the wrong thing to focus on, because we kind of know where they're at. They're not going to deviate from that significantly. The question's really, how can we get movement from policymakers? That's really what we care about. And why is that so important? And it's because DeFi and crypto in general solves a lot of policy concerns that exist. If you really dig into it and you say, what are your policy concerns behind this law? The answer is going to be, X, Y, Z. And when you look at the DeFi equivalent, you're going to say, well, that policy concern no longer exists. And the thing is, regulators don't get to choose whether they need to ignore that or not. They can, but frankly, they're not supposed to be policy bodies, right? They do it more than they should, but they're not. It's actually for the legislator to decide, should I pass a law that treats something differently because my policy concerns are addressed when it comes to whatever that activity is. So my view is we should be focused on policymakers. In terms of the regulators, the only thing I'd say there is that I actually think it's going to be more positive for DeFi than people think. Not because regulators are going to let up, because regulators are going to be very surprised by the difficulty that they are going to have. If you think of leverage in negotiations between regulators and any type of company that's developed software or a DAO, I mean, a lot of that leverage has to do with can you actually achieve your enforcement goals? And when your enforcement goal is, I don't want this thing to exist anymore, but I can't stop it from existing, suddenly a lot of your leverage is gone. And now you have to fall back on things that, frankly, don't really actually satisfy your goals. And frankly, that a team might not even care about and might give. And so I think you might end up seeing wins from regulators that don't really matter for DeFi, that I actually would view as wins for DeFi. And I don't think Polymarket should be looked at as an example of that. Polymarket was centralized in so many ways that like it's just not a good example. I think there's going to be much better examples where maybe we do see settlements, or frankly, we'll see court actions, or we'll see nothing happen for a long time for the exact reasons I'm describing, which is regulators being surprised by how hard it is to actually enforce things.
So that's what I was going to say. Like sorry, Sarah, but I was just saying we haven't seen wins yet. Sure, we've seen the poly market order, and we've seen, I'm blanking on the name, but what Commissioner Peirce called the Dino order, right? Decentralized in name only, like for DMM or something like that. But those aren't wins. Those are facts that are very, very different. And maybe they just used the term decentralization, but didn't really embody the ethos of it. And so I agree with Mark. And I think Sarah, just from, watching our body language and her nodding, agrees. Like, I mean, this is just a totally different way of operating in an economic system. And so while I think that there are things to be built out, right, more robust disclosures and things like that, that will protect consumers, you can't regulate an entity that doesn't have one centralized person, a piece of software that doesn't have a centralized person or a centralized corporation controlling it. And so I think that what regulators will have to do, and this is what I think policymakers are thinking about as well, is what's the purpose? What are we trying to achieve? And then what can we put forward that will actually help us achieve that? And to Mark's point, it's very difficult. It's very difficult when you only have a piece of software. And it's something that Mark and I used to talk about with clients a lot is, look, people talk about Bitcoin as being peer-to-peer, but your interactions with DeFi protocols here are really peer-to-protocol. So you don't have counterparties and you don't have others that are identifiable to interact with. And so I think that it's going to be a challenge, but the thing that regulators really should be thinking about is what are our goals and what does the technology do? And really spending time learning about the technology, because there may be an intersection where something works, right? A more robust disclosure regime or something like that. But the current regime in its form as it is today in the US and abroad doesn't necessarily work. And I agree with Mark that policymakers are probably a better way to move if you're going to spend time educating these days. I will say, even Sarah doesn't seem to agree with that, but I think that if you're going to spend time, that might be the right place to do it, because I think they've at least accepted that they have to try to figure out what the technology does and how it works before they can do anything that makes sense, at least in the US. I can't speak for necessarily regulators abroad. And I think we can say that the FATF guidance maybe was not the best, in terms of what they've put forward as a workable regime for DeFi. Although they say it's not meant to expand out what they are currently regulating today. But I do think that trying to educate policymakers rather than regulators is the important way to go. They just have different functionality at their fingertips of what they can and can't do. Sorry, I was just trying to think of the word.
It was like a lobbying thing.
It wasn't meant for money. Policy, that's not a policymaker. If we're talking about money, I think we have to think about a different area.
Okay. I just think that's right. But I think that regulators are stuck on this dino line. It's just easier for them to grapple with. Like the whole construct around these regulations is pivots on centralization, elements of centralization. So they're at an impasse moving sort of past that and what to do, right? So they are having these like takedowns, but it's mostly this marketing campaign, right, of mislabeling sort of projects as representative of the whole space. And frankly, we're seeing that a lot in Congress with these people that are getting up and saying that basically all crypto transactions are intermediated and very expensive because this one woman did a transaction on Coinbase and it cost her whatever. And so that speaks to the whole space. I'm a little bit like down on Congress because of these talking points. Like even if you are there with like rational points, like Mark says, it like fulfills a policy goal. It's like hard to get there with them. And another thing that I'm kind of depressed over is this focus on AML KYC compliance at the expense of like literally privacy is a human right. In the UN like Declaration of Human Rights, like it is a fundamental human right, and it's statistically proven that these regimes don't work, and only 1% of people are like committing crimes. And so the people that are just out there purchasing like JPEGs and like Rogaine and, you know, like foot cream or whatever, have a right to privacy for that. They're just living their lives. They don't need a dossier like on them for, you know, like this person's a weirdo. Like that's 99% of the people. They have a right to privacy, but we can't get past this talking point where, you know, national security and, you know, financial crime prevention trumps every other competing concern. And there's like no balance in these talking points or rationalizing right now. It's just like this shift to surveillance and doubling down on it. And that's just like why I'm shaking my head about trying to get through to policymakers right now. It seems like kind of tough out there.
Yeah, I will say from my point of view, I think one of the most interesting things on the policy side to come out of the last few years in crypto and DeFi is an increased awareness, even sort of amongst my own sort of circle, of the degree to which relatively narrowly intended laws from the 70s have sort of been turned into these policy swallowing super policies, right? The AML KYC policy kind of swallows, at least as far as I can tell, every other national policy that comes up, right? It gets subsumed in, well, right, but we need to know who you are and where all your money is, which I think is to the extent that there's, I think, I'm kind of on both sides of this. I think you got to go engage with the regulators, and the policymakers have not been super helpful recently, but there are certain things, particularly like this fundamental balance, and this speaks beyond crypto, right, between privacy and sort of tax collection and things like that, probably needs to be revisited on a broad basis. And hopefully DeFi kind of drives that conversation forward here. Mark, did you have any thoughts on that? Any further thoughts on that?
No, nothing to add. I mean, I completely agree with Sarah. I mean, I think one of the things, right, that we see all the time is this, like, how is KYC AML going to be implemented in DeFi type discussion, right? And like, I think that the second there's so many reasons to point to as to like why that actually isn't beneficial. So like, easiest example, right, would be if you like, let's leave alone like the arguments that like Sarah just made, which are like totally valid, right? If you just think about it just from like a product experience perspective, right? So now you've basically split pools of liquidity, right? So now you basically got two different groups of people who have worse pricing. You have the KYC pool who has less assets in it than they would have otherwise. And then you have the non-KYC pool who now has less assets in it than would otherwise. Both of them are going to have different pricing. There's going to be different price dynamics between both of those. And so you've basically like messed up the market where you're going to have institutions with different pricing than retail. So there's like all these like second order effects that have nothing to do with privacy or frankly KYC that result in like, I think, market structure differences as a result of that. And now you've basically introduced that into a system that could have been a free market with no interference whatsoever, which is DeFi. Now you've entered some level of interference. Let's just take it like one extreme further, right? You have a whitelisted participant not in a compliant pool who now gets like whacked by OFAC for one reason or another, and now they're non-compliant. And they're like 50% of the pool, and they remove all their capital from that pool. And now pricing in that pool is completely different than it was at one point, really from 1 second to another, because a small centralized group decides that they have to remove it, right? And so like, by the way, I can make like counter arguments as to why like the permissioned concept is like good in some ways. Like there's other arguments to be made, but like if you're arguing for like why it's bad, like there's tons of arguments for why it's bad that are just like market structure reasons.
I think in addition to the market structure reasons, there's an overarching reason why using traditional KYC is problematic, which is we're just going to perpetuate the same problem that exists in traditional finance that DeFi is looking to solve for. So if you're using, like, we know that the traditional banking system excludes about 1.7 billion people in the world today. That's probably even like a low number. And if you're going to implement you need to do your passport in a video thing, that's not going to work for a variety of different reasons. And so there are a lot of crypto native KYC protocols being built out there, But to sort of the point everybody is talking about here, they're using this traditional KYC. How do you have a passport and all the other things that banks normally check? And so doing it that way is going to just perpetuate the same problems we've been seeing in terms of excluding people from a system, which is what DeFi is really trying to correct for.
Yeah, no, I think those are all excellent points. And I think we're also coming up on time. So I think as a sort of a closing thought here, I'd like to ask each of the panelists, what's one thing you'd like to see improve in DeFi or change, right? So if you could reach out with your magic wand and change the market, the legal structure, current behavior, what's something that you think could be improved?
From my perspective, I'll point to
not to put you all on the spot.
I think that it's better for DeFi participants if there's better disclosure, and it's better from a regulatory / policy perspective to point to that. And I don't mean disclosure of like non-public information. I mean disclosure of information that is already publicly available, making it easier for people to read, right? So essentially, make your interface an open book on what's actually happening on the code, right? Like I think making clear that interest rates are variable, for example, rather than fixed, which a lot of times like they're essentially going to be interpreted as fixed when you just have, APR or APY on there, right? And like you should probably make it clear that it's variable, like those little things. I think like the hard part is how do you like not destroy the UX or the UI design, right? And I think there's like strategic ways on how to place stuff, pop-ups that can be used, or like kind of when you scroll over things. I think that like good designers can handle that well, and I think that makes a huge difference from a user perspective and from a regulatory and policy perspective.
All right, good answer. Rebecca, you're up. What would you like to see improved or changed?
I mean, I don't know where to begin. So I'm very happy with the current system. I do think things are building out. I mean, what I would like to see is what we're talking about with the regulators. I'd like to see them slow down, especially with and learn a bit more about the technology, and maybe in a more friendly and approachable way, instead of the way that I think they're going across the industry at the moment. So that, and then the other thing I really want to see is what I said before. I want to see something different than traditional KYC. I understand that may be something that's important, and that it may be really important to build out the system further, right? To make institutions more apt to come in, and to make more retail users, in the middle of the country who are used to banks having KYC and stuff. But I want to see something really different. And I think there's a real opportunity here because of the transparency in the system, that there are ways to verify people, verify their funds. That's really different than saying, do you have a passport or other form of identification?
Yeah, I would love to have something where my clients could just query someone's wealth level for investment purposes, right? And not have to collect and hold all of their personal information on their servers, which gives me constant kittens, honestly. I don't know about anybody else, but I'm still not fond of the regime where every business on earth has to maintain a database of private information for all of their customers, basically.
And comply with really onerous rules around it. It's not like you just store it. It's like there's a whole thing that goes into it.
Yeah, none of which seem to prevent them from getting leaked or hacked periodically. So, Sarah, how about you? What's your last note, magic wand, changes or improvements to DeFi?
Yeah, I'm gonna just like blend those two together. I think a change in regulatory stance where you don't have like permanent ominous music playing in the background, where there's like enabling guidance that recognizes the benefits of the technology. Like if there is some movement there, even like an opt-in disclosure framework where people have more certainty, they'd spend way less time on these elaborate structuring exercises that like may not suit the project. But that's what's going on now, because we are structuring into a regulatory vacuum on these projects. Just sort of more of an open dialogue on regulations that acknowledge the risks posed and the risks mitigated by the technology be a huge step forward for the space.
All right. Well, and I'm going to piggyback off of that and say I think that would be a great idea. And you should all, if you're interested in encouraging that kind of policy discussion, check out mama.global, which is one of the kind of co-sponsors here. And as Mona dropped in the chat, if you want to hear about my own personal views on some of this stuff, you can read our letter to the FATF as well. I think that wraps us up for the morning. Thank you all for joining, and thank you, audience, for your interesting questions. Anything, last notes or thoughts that anyone wants to share that we didn't get to touch on? Going once, going twice. Thank you all very much for joining this DeFi legal panel at the E2 Summit. And with that, we will bid you all adieu.
Thanks so much.